The discussion forward about the stock-specific action that we're expecting today. Chakri Lokapriya also joins us on the show. Chakri, hi, thanks so much for making time and speaking with us. Let's begin by discussing Bajaj Finance.
I thought you'd discuss the World Cup first. Given that the World Cup fever is on, Chakri, have you managed to score yourself some tickets?
Indeed, waiting, for the first match this weekend. Absolutely. And Bajaj Finance, given the fact that the company is going to do a QIP, it positions itself well to, maintain sufficient liquidity, maintain its margins in the upcoming festive season. So far, consumer demand has been weak across board, except autos. That's a different ball game. So for the market that Bajaj Finance is after, it's been weak. So this will place it well. Its valuations will look more attractive. So in spite of its high valuation, I think given its leadership position, Bajaj Finance will do well as a stock.
Okay, Bajaj Finance and World Cup, we got your view on both of them. But, since we're talking about the World Cup and there's interesting perspectives coming in that, the food aggregators, the online food aggregating platforms are really going to benefit big, the likes of Zomato, Swiggy. Do you think that this is the time for them to really cash in on the World Cup fever, and it's going to be categories across the board in terms of food, that will likely benefit?
Right from the the food aggregators to the QSRs, both will benefit. But we need to note that in the case of Zomato, they have again priced up. I mean, the competition is again going up. In terms of now the focus seems to be shifting. You have Swiggy, which is now focusing more on volumes, given that the festive season is coming, which means Zomato will also be forced to do so. Given that the stock has already run up now, and given that now its focus will have to move away again from profitability towards growth, which will kind of put a brake to the stock.
Okay, so that's the word coming in as far as the beneficiaries of some of that World Cup demand that will come in, as well as Bajaj Finance. But since we are speaking about Bajaj Finance and the fundraise which is impending today, what could be the size? What is going to be the impact on book value? And what did it mean in terms of the valuation of that stock? Let's go across to Vamakshi to find out just that. Hi Vamakshi, good morning.
Well, yes, Bajaj Finance in focus today after the company is expected to hold a board meeting in order to consider equity capital raising today. Now, keep in mind that this capital raise is coming in after nearly 4 long years for Bajaj Finance. In fact, Bajaj Finance last raised rupees 8,500 crores in 2019 when its AUM was 1.4 lakh crores. Now, with this capital raise that was just before COVID and the slowdown that was seen during the COVID, Bajaj Finance was well capitalized. In fact, the tier 1 ratio is even today is nearly around 23%. So largely brokerages have highlighted that the capital raise at this juncture could be on account of several factors. They've listed down a few factors. Number one being the strong visibility as far as growth is concerned over the medium term. Now keep in mind the company also came out with its Q2 update yesterday, and the AUM grew by 33% on a year-on-year basis, beating its own stated guidance of 29 to 31% growth in the AUM. Apart from that, another reason why the fundraise could come in at this time is the fact that capital infusion could be taking place in Bajaj Housing Finance subsidiary before its listing by 2025. The company could also be gearing up for competition from new entrant Jio Financials. Apart from that, they will also might be looking to raise money before the national elections. So all in all, those were some of the expectations with regard to the capital raise. But CLSA believes that nearly 10 to 13% book value per share accretion is expected if the capital raise of nearly 10,000 crore goes through. And even after this capital raise, the return on equity for the company would be in the range of 21 to 22%. Largely, brokerages are appearing to be quite positive with regards to this capital raise, and that is the reason you should keep an eye out on Bajaj Finance.
Thanks very much for giving us that view, Vamakshi. But let's move right on. And Harsh, it's not just cricket that's keeping you very busy. It's also the bank Q2 updates, because they're pouring in thick and fast. What are the latest ones and what do the updates look like?
Right. Been quite caught up. Let's quickly move on. Bandhan Bank, let me take you through the numbers there. We're looking at advances growth of 12% on a year-on-year basis, but sequentially it's gone up 4%. Now they've guided for a 20% growth. So the 4% sequential uptick clearly demonstrates that they are going in that direction towards that 20% growth mark. So at least there is hope in the second half of this year that they'll clock that 20%. Deposits, meanwhile, have gone up by 13% year over year. Again, 4% very healthy sequentially. So definitely a positive coming through for Bandhan Bank. Both sides of the balance sheet growing fairly well in this quarter. You're looking at the deposits largely aided by the retail deposits, which has gone up by 13% year over year, 7% sequentially. And therefore, what we've seen is CASA improving. So the bank has largely delivered on that loan growth, at least in this quarter. Let's quickly move on. J&K as well. Advances growth up 16% year over year, 4% up sequentially. So definitely positive again from J&K Bank. That growth continues to get clocked in. You're looking at deposit growth as well, up 9% year over year, not looking too great, or rather slightly muted on a deposit growth front. But when I'm looking at it sequentially, 4% uptick in terms of deposits sequentially. So healthy growth coming in there as well. CASA has grown 1% year over year. It's shrunk a bit marginally on a sequential basis, and therefore overall the bank seems to have delivered a good set of numbers. Quickly moving on to PNB, on a large balance sheet, far larger than both of the other ones we spoke of, 14% year-on-year growth, largely in line with what they've guided for. Deposit growth too at 10%, again exactly where they've guided for. Deposit growth up just about 1% on a sequential basis. CASA has gone up by around 2.5% year over year. Again, it seems like credit as well as deposit growth is sustaining overall for the industry as well as for PNB.
It seems like at least for now, it's all hunky-dory for the entire financial sector, Bandhan Bank, J&K, PNB. But to add to that, even RBL Bank came out with a solid set of growth numbers that we have seen. Of course, the growth is picking up given the base was also low. But Chakri, your view on this entire second-tier rung of private as well as public banks and the kind of updates we are getting from them?
In the case of public banks, they're clearly benefiting from the increased government spend. The government is spending on railways, water, defense, infrastructure, roads, all these things. And if the cumulative capex is up about something nearly up 50% over the last 1 year. Now, and most of the borrowing is coming from the PSU banks and coming after a lull of the COVID, post-COVID, etc., repairing their balance sheets. Now, loan growth is picking up, and this is high quality loan growth, given that, whether it's defense or water or infra, government is the backstop, so which means NPAs are going to be in control. And the valuations are still very attractive. Even after all the run-up, they're all trading under one-time book value. And therefore, I think all the PSU banks are well placed.
Which is your favorite? A lot of PSU banks are well placed, but they have run up as well, Chakri. Where do you see value the most?
Still, even you look at Bank of India, Union Bank, Canara Bank, and of course the large State Bank of India. For all of them, State Bank of India still trades at only about 1-time book value, and the others are under book value. So I think they can all trade much higher like they did a few years ago.
Okay, meantime, let's also get in a sense then from you, Chakri, as to how you're looking at the entire manufacturing boom really benefiting India. Do you think that a lot of it has already played out, or that there's a very long road to go, and that a lot of the companies that really excel in this space can stand to benefit in the long haul?
Like you rightly put it, it is a long way to go because it's still very beginning. The manufacturing renaissance is very new. It's actually not even renaissance. It's the first time India is doing, but PLI is benefited largely, and also the import substitution is benefiting largely. The many new sectors like the electronic EMS sectors, companies like Avalon, Keynes, Dixon, all these companies are benefiting from that. And the traditional companies, which is Bharat Electronics, they're not just defense, they're also doing other engineering products, which will help broaden their scope of services. So now these companies are going to grow revenue at like 35% plus for the next at least 5 years plus, earnings in the same neighborhood. So which means, and with their product mix hopefully improving, they can trade at high multiples. So I think still there's a long run to go.
All right, that's the view coming in on that entire sector. But moving right on, yesterday we interacted with none other than Vijay Kedia. He spoke about his recent investments in infrastructure companies. Which ones are they? Let's listen in.
like I've invested in a company, two infra companies. One is debt-free company.
Okay.
And
Which is the debt-free company?
The Om Infra, I recently invested, and it's not a recommendation. Just
Yeah,
we
of
are
course.
discussing
We are
the idea.
discussing the stock.
So it's a debt-free company. Very minor debt, maybe short-term debts are
That's
there.
working capital.
Working capital debt. And another which I invested a little a while back, that was Patel Engineering. It was having some debt in its books. But now they're reducing their debt. At one point of time, they had a debt of around some 5,000 crore or something. Now it is somewhere around 1,700 crore, 1,800
That was about the small cap stocks which Mr. Vijay Kedia likes, and patience is the biggest virtue that you need to have in the stock markets. That's what he was talking about as well. But Dinesh, let me come to you and talk to you about what's happening in the market right now. And of course, one space which is seeing quite a bit of excitement is pharma. Talk to me about which are the stocks that look good to you on the screen.
So as of now, we are seeing a better price action in the mid-cap pharma names. So something like Granules, which has slowly and steadily made a move from 330 levels to 360, steady uptrend here. And starting up a longer-term uptrend, the stock has consolidated for the last 2 years and now making a turnaround. So this could be a stock which could slowly go towards 400, 450 levels. So Granules India is one. Second, looking out for something like a Aurobindo Pharma once it starts making some bit of a dip, or some consolidation, because the leaders have clearly been Lupin and Aurobindo Pharma, as well as a Glenmark Pharma, which have continued in the trend. But the larger names are slowly and steadily also making some bit of a recovery. So out here, Sun Pharma has been a slow and steady mover, but once it crosses 1200, that would be a game changer. That would be a high crossing to 2015 levels. So that would be interesting in the large cap space, but in the mid cap space, as of now, Granules looks the most interesting one.
Okay, meantime, just reading some interesting newspaper headlines, and it seems like Audi's retail sales have risen 88% from Jan to September. You know, luxury demand, and this is something, Chakri, that we've been talking about through and through, that premium demand, be it across categories, has really been holding out quite well. Is there anything, if you can elaborate a little bit more on this theme, or share with us any data, or run us through any companies, stocks that you see really benefiting? Because even when we had M&M in the studios, they were talking about how that premium segment really is a standout.
The premium segment is a standout, and in Indian stock market, as far as automobiles is concerned, we don't really have premium. Maruti caters to the mass and mid segment. And if you look at the two-wheeler autos, again, it's the same story. Now, incrementally, you have companies like Bajaj, Triumph, Hero Honda, Harley Davidson, etc. And so those are very incrementally, very small, tiny portion of the overall revenue. But still, passenger vehicles, just as a space, still looking strong. Two-wheelers, very good. Commercial vehicles, because infrastructure spend is being so strong, commercial vehicle sales are picking up. And so, which means whether it is the only name probably you can talk about, which is in the luxury space, is Tata Motors. Tata Motors, again, is going through a major project revamp. Jaguar is out of the picture. It's only Land Rover sales. So a combination of Land Rover sales plus its CV business, I think Tata Motors looks okay.
Okay. Chakri, since we are in the World Cup mode today, are you in for a round of some rapid fire questions coming your way?
Yeah, sure. Why not?
Okay, so which segments do you think can go through a purple patch in the near term?
I think it's electronic manufacturing sector.
Okay, do you think IT sector will continue to be under covers for now? A bit of a rain coming in for the IT sector?
IT sector is, I think, next 6 months, I think it'll tread water, not really go anywhere.
Sector is likely to see the maximum amount of Yorkers coming in.
I think it is, actually, it is probably the IT and pharma. If the US goes through some kind of a recession, then they will get hurt the most.
I'm going to also pitch in then. And Chakri, do you think that the mid and the small cap pitch is still in a good field?
Absolutely. I think it's still sixes all the way. So you still have to be in there.
And do you think that the CapEx theme will continue to hit boundaries?
Yes, I think CapEx is a long way to go. I think the government is doing a phenomenal job in railways, defense, infra, roads, and I think we need to invest in all those sectors.
Which sectors do you think are good for a power play, aka a tactical trade for short term?
Power play, it's still the power sector. And in the power sector, I would still buy REC Power Finance because they're financing just about any power company. So which means it's easy to buy them.
These are some stellar questions, by the way, I have to say, by Sharad. Should we call this Virgin Anisha apple juice with Anisha, Aisha and Avan maybe? But, Chakri wanted to get in another question. Do you think that investors have a chance to get an LBW in, say, the PSUs and the defense space?
Defense is very unlikely simply because if you take a company like Hindustan Aeronautics, after all the run-up, it still trades at 18 times. It has revenue visibility for the next 5-7 years. So the chances are low. So I think they're playing a great game.
And will FIIs make a comeback in the second innings? I promise you this is the last question.
For that, the rupee needs to settle and US needs to get its act in terms of calling a peak of its interest rates. Until that happens, it's unlikely we're going to get an FIIs coming back.
Okay, so if I ask you, Chakri, for the record, which is that one large cap which you think is on the front foot and which is the one which is on the back foot?
The front foot large cap, I think, is still SBI. And on the back foot, it's still IT. So whichever you can take, Infosys or TCS would probably be on the back foot.
Okay, let's hang in there and let's take it across and find out what are the other stocks which are in focus. And Naveen Fluorine, it seems, is going to be in focus. The MD has resigned from his post amidst the series of resignations of late that we've had. Let me take it across to Lisa and find out what could be the major business impact, if at all, that could come by. Lisa?
Right, so Naveen Fluorine will be in focus. As remember last week, Rajesh Welling, who's the MD, he resigned and the stock had tanked around more than 10%. The management, they had a con call yesterday post-market hours and they tried to alleviate the concerns of the analysts as well as investors because Rajesh Welling, he was an important force and driver behind the capex plans in the last 3 years. So yes, there were some concerns and the management said that there won't be much impact on the capex going forward and future capex programs, if any, if that gets delayed, it will be more on the back of global macro concerns. So yes, and they also added that they will be looking at external candidate and it is too early to decide the payout structure for the candidate and it will dependent on many strict criteria. Well, Jefferies also came out on a note on Naveen Fluorine and they have reduced the target price. They have downgraded it from 5,475 earlier to 3,675. Well, what Jefferies highlighted that they are seeing some concerns in the execution challenges and also they said that the management has not undertaken any concrete steps to address the high top management turnover because in the last 5 years there has been a lot of churn happening, both CEOs, CFOs, the top level management. So yes, capital discipline is in focus and they expect a slowdown in the expansion plans and also execution challenges going forward and they have cut the FY24-25 EBITDA by almost 13% on the back of the delays in commissioning of new capacities which will also flow into lower revenue going forward for the company. So yes, we are expecting a negative reaction from Naveen Fluorine on the back of this downgrade coming in from Jefferies.
Okay, two triggers there for some weakness on Naveen Fluorine. But here's Hemang Jani telling us what he makes of Avenue Supermarts in the light of their quarterly update and then, of course, how the brokerages read into that.
The revenue per square feet, which remains subdued in the recent past due to the addition of the large store size and the weak discretionary spending, there is some degree of pickup over there. And we think that, and these valuations down, the comfort will not be much. But for, somebody who's delivering and where there is a decent amount of growth visibility because of the higher store addition, I think it would make sense to add into Avenue Supermarket at this price for a maybe 15 to 18% kind of an upside.
All right, let's get a move on then and also discuss the outlook on other individual sectors and the hotel space in particular. Forgive us, Chakri, the World Cup fever is on, so we keep going back to that point. And given the fact that, you know, exorbitant prices is what they're charging, a lot of hotels as well seem to be booked out. What's the view then on the likes of Indian hotels, Lemon, Chalet, etc.?
Again, with the World Cup thing, yes, indeed, all these hotels are going to face very strong demand. We have very strong demand rather for the next several months, and then you have the holidays, and then you have before that the festival season. So I think they're doing extremely well. The wedding season, indeed. So banqueting across various categories is very strong. Pricing is very strong. Hotels as a sector, Indian hotels, Lemon Tree, Chalet. I think all these three companies do very well.
That's about the hospitality segment. We just got the updates coming in from loader developers as well, and it looked like a good number coming in terms of the pre-sales as well as the fact that they've managed to reduce the debt on a sequential basis as well by some 500 odd crores. So a good update coming in, and even from Sobha, which has been reeling under pressure because of other issues as well. They've issued a clarification to us saying that a lot of reports are speculative in nature, and the update that we got from Sobha in terms of the Bengaluru market and the kind of uptick we have seen is also quite strong. Chakri, within the real estate pack, what's the favorite?
Shobha still looks good, notwithstanding the current confusion. Hopefully that is clarified by the management. If indeed it's speculative and there's no merit to what they're saying, then which is basically related to building without permissions. Because the Bangalore market is still very strong, still largest market for Shobha. And I think the company looks good. And so does even Aloda.
Okay, fair enough. That's the view coming in on the entire real estate space. In the meantime, let's also get in some chart checks going then. And Kunal, given yesterday's move in Axis, SBI, IndusInd Bank, quite contrary to what we witnessed in an HDFC Bank and a Reliance Industries, what's your view on some of these heavyweights?
So I believe, what had happened is in the last two weeks, Axis Bank and IndusInd Bank were actually one of the better performers. The selling was quite prominent into the likes of HDFC Bank, Kotak Bank, particularly from the larger cap private sector banking names, and even ICICI Bank to a larger extent. These were the three key names which were dragging the bank Nifty on one hand, but the outperformance in the other two names, Axis and IndusInd Bank, managed to just settle off or balance out the bank Nifty movement. Now, yesterday was one of the classical days where there was a sharp selling which had happened into these two names, Axis as well as IndusInd Bank, and I believe that could probably be a more of cutting off positions from the the larger cap ones or the ones which have been performing. And to offset that, the underperformers, they started to show signs of pickup of price action. So that I believe probably be more of a balanced price action within the bank Nifty. I don't read it too much that the private sector banks like Axis, etc. were going to a sharp selling. I would believe that it could be just a one-off day where these stocks had seen a sharp selling and they could stand to recover quite smartly from here on. So I would believe that they could actually be good buy on dips candidate from current levels.
Okay. Well, the World Cup fever has just about begun right here at the ETNR studios at least. And one of the official sponsors for the World Cup was IndusInd Bank. We caught up with the MD and CEO Sumant Katpalia, and he shares with us his own prediction as to who's going to clinch the cup.
I believe this is a very large opportunity for IndusInd Bank to refresh and reignite its brand.
What are your personal favorite moments from all three cups which has been won by India? 1983, the 2007 Cup, 11, or now you are expecting one?
So I think 1983, I think underdogs came in and won the World Cup. I think that was the largest. And I think the first win over West Indies changed the tide. They got the confidence back. I think 2011 was the Dhoni's inning, and I can never forget the six which he ate as the winning shot. And I think that was something spectacular. And I think you also remember the Gautam Gambhir innings, which nobody talks about.
Definitely.
But I think was a game, the changing moment of the game, in my opinion. And I think 2007, we were nowhere in the T20, and the underdogs again won it. And I think 2011, we are not the underdogs. I hope and I wish the team well that we will do well.
But this time we are favorites. What are your expectations this time, and which players you are watching?
I'm always optimistic in life, and I think we will win the World Cup.
Okay, so we will win the World Cup, of course. It's been a while, the 2011. So hopefully this time around we will clinch the cup. But shifting focus to what's happening in the FMCG space, and I'm not sure whether World Cup is going to enthuse the rural markets or not. But for now, the recovery there seems to be very, very slow. At least that was the indication coming in from Marico as well. Chakri, do you think it's better right now to just be in the stocks and the sectors which are more urban facing rather than rural recovery, because it's taking longer than anticipated?
Yes, the rural is weak, and even if you look at things like tractor sales are weak, and so the rural spending is unlikely to pick up in the next quarter. So maybe 2 quarters down the road, in the early next calendar year. So and all these stocks, the FMCG stocks, are not cheap, inexpensive stocks. So nice, good companies, but rich valuations. So we'll stay away from the staples.
Okay. Chakri, also wanted to get in a sense on what is it that you are making of the trend within the smaller private banks. The larger ones, of course, are taking a step back and not in favor right now, as are the PSBs. But what about the smaller private banking names, given how the quarterly updates have panned out?
The smaller banking names, in the private space have been quite a mixed bag. You look, each one of them has, is a company-specific issue. They're not benefiting from any sector trends like how PSU is benefiting from the corporate spend and infra spend. Each one of them has, for example, City Union still has some slippage issues. Federal Bank is still fixing some of its asset liability matches. So I think that is the trend. So I think it's I don't really see the point in focusing on mid-cap private banks when there's so much to play for in the PSU banks.
Okay, Chakri, we'll let you go on that note. Thanks as always for taking the time out and joining in today. Just counting down to what the